Good morning, everyone. Okay, can you hear me? See if I can hear myself here. Anyone running the meeting? Can you guys hear me? Okay. Oh, I didn't hit broadcast. Hold on. Okay. Good morning, everyone. Let's get going here. I'm back. All right. U.S. markets yesterday managed to break out to new all-time highs on the closing basis. Loving it. Bull market, baby. Everything's freaking rallying here. All looks good. We did have some U.S. manufacturing numbers that came in good. There's been a little bit of mixed data across the past couple of sessions, but all in all, pretty solid. Today's focus is probably going to be on the ADP employment change. Running ahead of Friday's big number, which is obviously the non-farm payrolls number. I think that tomorrow's non-farm payroll number and the ADP number today will be the first number that will really be looked at outside of the weather. Every time that in the past few months of data we've been watching, and it doesn't really, when the data disappoints, everyone's like, oh, it's just the weather. But I don't think they'll be able to say that this month. So this is really important to me. I think that this is going to be a little bit of a back to normality in terms of people will be able to actually accurately look at this month's numbers. In Asia overnight, we had a little bit of follow through there. You can see the Nikkei up over 1%. The Hang Seng basically is pulled back to about flatline. We're continuing to see here and sit here and hope for stimulus out of China. No real news out of that as of yet, but we'll continue to monitor that going forward. The one thing that's changed over the last maybe two sessions is that the yen has finally started to weaken back out. We had really gotten into a holding pattern after we had bounced hard to around the 102 level. We're back up to 103.80. That risk barometer, I think, is shouting at us that we could continue this rally, and we'll have to continue to watch that one. All right, no corporate action to report as of today. Looking at market data, we had the Japanese monetary base out earlier, a little bit soft. We've got nationwide house price numbers out of the UK. We've got Spanish unemployment. We've got the UK construction PMI numbers. We've got European PPI. Locally, we've got our consumer confidence numbers at 12, so watch that one. And then we've got a slew of data out in the States between mortgage apps, ADP employment change, ISM New York, and factory orders. So today is a reasonable number day out in the States. I think we will see a little bit of excitement around those numbers, but you guys know how it is. Leading up to the non-farm payroll number, everybody's kind of waiting for the big boy on Friday. All right, let's jump into the maps. Okay, the first thing we'll look at is the S&P 500. We'll shorten it up here a little bit. So obviously, yeah, we broke out. I think by any measure, we really broke out yesterday. You can really look at it that way, which is the way I'd like to look at it, probably because I'm more of a close guy and not so much of a wick guy. But if you see here, we really made kind of a ascending triangle off of support. You can, breaking out probably only yesterday. Could have said that we broke out the day before. Anyway, you look at it. I mean, if you look at it horizontally, obviously we also broke out. Not only did we get the breakout, but we also closed on the highs, which is definitely really bullish. Probably not a huge target here. Really only looking for a move of about, let's call it 35 points to the upside here, which is probably only going to take us to just over 1900 on the S&P before we start to hit some sort of resistance in terms of an upside target. That being said, hasn't really been stopping us recently. All right, Germany. If we look here at the 1 year in Germany as well, we can run this and see that yesterday we also closed more or less right at resistance. I think we're just a little bit below. We're going to be looking for, I would say, a push above 96.40 to really signify a breakout. and we really need to push away from that level a little bit. So, but watch that today. I mean, obviously, we're probably going to get a nice little, a nice higher open. Probably be opening right about that level. If we start to see a push above that, can really get European indexes going again. One that has really been lagging badly is definitely the FTSE. You can see the FTSE has really underperformed both the S&P and the German DAX, and we'll probably be looking for that to play a little bit of catch up. Why are we talking about that? Obviously, that means good things for our market. We start to play catch up and moving back up toward the highs. We're probably still 4 or 5% away from even testing that resistance where we're already breaking out on the other markets. So watch those closely. I think it could definitely start to drag our index higher, as well as the FTSE maybe starts to catch a bounce. All right, the next one we'll look at here, we're getting into some of the single stock stuff, is Kumba. Kind of seems to be in play a lot lately. You can see here coming back up to test the level where we broke down from at $385. That level is going to be important. I would expect it to test it today. We closed at 381 and 3/4 yesterday. I would expect us to test it. If we can get above it, there's no reason why we can't pop up here and fill the gap. This chart looks a little bit excuse me. It looks a little bit like the ABSA chart. If you were to stretch it out a little bit more, it would look a hell of a lot like the ABSA chart. And I think if we can get above the 385 level, there's no reason why we can't quickly pop up here and fill the gap up at 426. It could be a nice move if we can get a close above 325 in Kumba. All right. Sasol, the next one we'll look at is Sasol. Sasol really kind of pulling back to some sort of support, basically where we broke out from recently. If I'm not mistaken, the level's around 585. Yeah, 585, 586, somewhere in there. You can see we really closed at 584 and a quarter last night. I think that this is kind of an important level for Sasol in the short term. Obviously, this thing's run a hell of a lot harder than everything else has. And if we drop that level, we'll probably be looking to come down and test trend support, maybe around $570 over the next few sessions. All right, Impalas, it only took about 5,000 points on the Aussie to get Impalas to break out, but we finally got our breakout. I think we've been looking at this chart for ever. And then yesterday, you can see there, we finally got the breakout. It's kind of even hard to see because it's so whippy in there, but bottom line is you can see the trend resistance comes in on this little narrowing wedge or triangle here. Definitely comes in somewhere around 120. I would say 120 on the nose. And we popped up above that finally. And you can also look at 120, I think, as a close. Let's look at it just a 30-day here. It's kind of hard to see because a lot of this action's intraday, but you can see 120 was like a brick wall here, and we just couldn't get above it. So the fact that we've been trying, we've been consolidating the whole time. The fact that we finally closed above 120, I think, is also significant. So on a number basis and also on a technical breakout basis here. So. Watch this one today. Let's hope that it has some sort of follow through. If this thing fails 120 again, I don't think I'll look at it ever again. But bottom line is, the shares like Amplats yesterday really broke out from another little kind of ascending triangle formation where we popped up above right off of support from essentially a wedge. So I think this one for some reason continues to gather steam, and it's been outperforming Impalas by a country mile. I think we look for Impalas maybe to play a little bit of catch up over the next couple sessions. All right, and the last one we're going to look at is Old Mutual, which really making sorry, we're looking at the London one there. I don't think that looked right. Hold on. There we go. All right, making a continuation pattern here in Old Mutual. and really popped up over the top as of yesterday. You can see there we're fighting really hard for this 35.5 level. We're never really able to close above it. Yesterday we finally got a little pop-up over the top. We're going to be looking for about 2 rand out of this, up to about 37.50. So, it could easily happen in the next 2 sessions. So watch that one today. I probably expect it to outperform a little bit. And pretty much everything in the sector has been trading well. So that's it for today, guys. Thanks a lot.